All right. Good morning, trade pros. Welcome to the morning market update for Wednesday, March the 20th of 2019. It's George Pappas of Trade Pro Academy. Hope you're having a phenomenal day and top of the morning to each and every one of you. Today, we have a pretty busy trading day overall. Yesterday, we seen a little bit more slowness or some consolidation, and we started off with the three rules. So we left you off looking for lower vol or lower profit targets, trading smaller size, and trading less frequently, and that would have guided you really well. Our team did incredibly well yesterday given the circumstances in our live trading, and I'm super proud of everyone in the room. Today, we're going to have a lot of volatility. So we're going from 0 to 100 real quick, to quote the late, great Drake Aubrey Graham. But what's happening is from yesterday, we went to a low volatility environment, and any volatility that didn't trade through yesterday's market is going to probably trade today. And so the important thing is we're going from a muted volatility to a faster pace environment. And guess what? Still start with the three rules and scale up as volatility starts to move up. We have a lot of events today on the calendar, and let's talk about them. Our morning market fun fact first: the S&P has returned an average of 0.02% over the past 5 years on the Federal Reserve decision days, which is today. Today's a big day. Little change when compared with the return of 0.03% on non-Fed days. So in fact, we get slightly lower returns on Federal Reserve days based on this, according to the market data from Dow Jones. Now, here's the thing that's interesting is the decision day is important because it creates tradable volatility, and it also has a ripple effect for weeks to come, potentially for a whole quarter, because this is a big decision and a big announcement that's going to be made this afternoon from the Federal Reserve. Here's what you need to know. We're trading this Federal Reserve announcement live with our elite team. We wouldn't want to let them trade alone because it's the power and strength comes in numbers. And being part of a community is how you do this thing professionally on a long-term basis. I'll tell you one thing. You look at institutional traders sitting at the desk, what do they have? We tend to think they have better technology, better resources, better news. Some of that might be true. And the number one resource every institutional trader that does this professionally has is each other. You look around a trading room, that's never one person in the corner in a room by themselves with their bed in the back. It's an environment that's created with like-minded individuals, and that's what's necessary for success. So I invite you guys to trade with our community. I invite you to trade with the community, and you'll be extremely happy if you choose to trade with ours. At Trade Pro Academy, today we're going to trade with our elite team starting at 145. We're going to open up the room, and we're going to trade as long as there's opportunity. All right. The yield on the 10-year Treasury note is ticking a little bit lower today, down 2 basis points to 2.59%. As we're waiting for Jerome Powell of the Federal Reserve to release the Fed decision. That happens at 2 p.m. Eastern time. And nobody in this world expects an interest rate hike. There's even a few people at this point that are interesting or expecting an interest rate cut, which I don't think is going to happen. But what we are looking at is looking for the more important factor of this meeting. Interest rates will be held steady. Two things we're looking for then, if we're not looking for the decision, we're looking for what will the dot plot look like. All FOMC voters have an opportunity to put a dot on where they think interest rates are going to be for this year, all right, 2018, 2019, and then longer term projections. And when you get a map or a chart of 18 or so voters, you start to see a trend. And we're comparing last meeting's dots to this meeting's dots. The expectation is for the dots to move lower on the dot plot, which would mean Federal Reserve voters are expecting interest rates to be lower over the coming couple quarters for the end of 2019 than they did before. That's not a surprise, and I think it will still give the market a confirmation that rates will be lower this year. All right, they'll stay lower. The projections will be lowered, which will support equity prices. So equities like to have low interest rates because these stocks that we trade these stocks not thinking that they're actually companies that are viable businesses trying to earn money. So lower interest rates translate to stock prices that are better because or higher because they have lower borrowing costs. And a lot of businesses borrow to finance their revenue generation. So that's why lower interest rates are good for the equity market. So if we get a lower dot plot, that will have the effect of higher equity prices. Gold will drop, and the dollar should also drop because lower interest rates are basically less positive for the US dollar, for the economy. All right, because why? If there's international flow or capital that wants to go into the US dollar or that's already in the US dollar, they're now being told they're going to get lower interest rates over a longer period of time. That investment is not as profitable for them. and they may have to reallocate. What do? They sell the dollar and move into assets that will be more beneficial. All right. So as these interest rates get revised lower, look for strength in equities and bonds, and look for weakness in gold and the dollar overall. All right. That's just one part of the two, though. The second part of this Fed announcement today is going to be equally important. I would even say it's more important than the dot plot, because there's expectations for the dot plot. And what moves markets is not news, it's surprises. All right. News does not move the market because a lot of news is already factored in and anticipated. And so it's not the news that generates the move, it's the surprise or the deviation from the average expectation of that news. Super important concept for trading. If there's one thing you take from this morning market update, that's it. It's worth its money and the price subscription right there. And you're here for free. So double win. Although statistics show that because you're here for free, you're going to take that information as less valuable. Try to trick yourself to make it seem like you paid $1,000 for it. It'll have more of an impact. The second thing we're looking for is the balance sheet. Jerome Powell has mentioned that he just in September of last year, he said this balance sheet unwind or selling these treasury bonds and mortgage-backed securities is an autopilot, which means they're unwinding the balance sheet in regular frequency. What does unwinding the balance sheet mean? It means you're selling bonds you own and collecting cash in exchange for those bonds. What you're doing is removing liquidity from the markets. So it's not a stimulus measure, it's actually a quantitative tightening measure. Now, fast forward to where we were just about 4 or 6 weeks ago. Now he's saying the balance sheet operation might stop prematurely before the end of the year. That's what we're looking to find out. If Jerome Powell says, hey, look, we're confirming today, here's the plan for how we're going to stop unwinding the balance sheet. Instead of selling 30 billion of mortgage-backed securities and treasuries, we're going to sell only 20. All right, that's less than the 30. That's a tightening measure. So that quantitative tightening is actually the inverse of easing. So think about what that means. As you tighten the market condition, that's actually bad for equities. You're removing liquidity, cash flow from the market. Equities have less access to liquidity, therefore they'll drop. So if he actually goes in here and actually that's what happens at the moment. I'm sorry, I kind of twisted around. That's what happens when you don't look at notes. I don't need notes for this one. This is a subject that's near and dear to my heart. When they're selling bonds or removing excess liquidities, if they pause selling bonds, they're actually removing less excess liquidity, which means what? There's more of it in the market. So that'll be positive for equities. So both a balance sheet unwind pausing and on top of that, a lower dot plot is positive for equities. Expect to see a rally. What would a rally look like? The most severe type of rally would be if it's a huge surprise. Dot plots are way lower than expected, and they're outright pausing the entire balance sheet operation. If they're just reducing it, that's slightly bullish. If they're pausing it, that's very bullish. The base case for today's market is that they are going to give us guidance on how they will pause the balance sheet unwind. That's what we're looking for the details to be. Some dates, some specifics, some numbers. Depending on what we get, that's going to be either really bullish, all right, somewhat bullish, somewhat bearish, or really bearish. It's like a survey on the phone. That's the Federal Reserve and everything you need to know about today's announcement. Assets to watch are equity indices, the dollar, gold, and bonds. Bonds are front and foremost almost. Typically, bonds and equities have an inverse relationship, not on Fed days. Traders who use bonds for correlations, which should be all traders that are successful, don't forget that. Remember that you're going to be seeing an environment where bonds and equities could likely move together for a large part of today's session. All right, a new round of high-level U.S.-China talks is underway. It's set for next week with negotiators seeking a deal by late April. So the June extension was rumored. It's not true. They're trying to get this deal done by end of April. Trade Representative Robert Lighthizer and Treasury Secretary Steve Mnuchin are heading over to Beijing next week to meet with Chinese Vice Premier Liu He, who's expected to lead the Chinese delegation over to Washington the week after. So there's progress. There's some good talks being made, and that's going to be a decent infusion of risk appetite in the market, which means buy equities. All right. That's that. Facebook has apologized to Donald Trump. They blocked his account from being able to comment and make new posts. They thought that he was a bot. They mistaked him for a bot. I don't know if that means that he's posting often. I don't know what it means, if it's spammy or what he's doing. But his account got blocked. It's now unblocked, and they apologized to him after he made a big stink about it. FedEx is down 5.7% on weaker global trends and forecasts. and 10 Cent Music's down 7% after posting its first earnings since its IPO, and the market didn't like it. Today's markets, Asian equities are all flat across the board. In Europe, for the most part, were flat as well, other than Frankfurt down 1.3% in Germany. That's significant. Futures in the United States were flat, sold off a little bit, recouping some of their losses. And today's session is looking interesting already. All right, crude oil is down 1%, gold's down 0.3%, Bitcoin is below 4,000 again, but up 0.5%. And this is the news on Bitcoin. As of today, Bitcoin is officially in its longest slump, or the longest stretch of negative returns in its 10-year history. Now, some people see that as negative. They'll say, hey, look at that, Bitcoin, ha, I knew it wouldn't do well. I see that as a positive. I'll tell you why. Let's celebrate the fact that Bitcoin has turned 10 years old. That's phenomenal, all right? It's a new technology that very many people were skeptical of. And as it evolved, people who didn't catch the upside felt left out, FOMO. They jumped in and bought it at the worst time, and then it crashed. But all things being aside, and throwing out the fact that, yeah, you could have bought a Bitcoin and bought a Lamborghini, great, that's cute and everything, but that's not a knowledge or skill that's going to serve you on a repetitive basis. Case in point, I can't tell you how many crypto traders come into a room and say, I made a ton of money with crypto, but I feel like it was luck. How do I actually learn to trade? And so, it created a lot of wealth for a lot of people. We're grateful and thankful for that on Bitcoin. And today, rather than bash it and say 10 years of longest losing record in 10 years, I'm going to say this. Congratulations to Bitcoin and Bitcoin traders. This market is establishing itself as a key player. All right, we're celebrating 10 years of history. That's phenomenal. And I think it's here to stay. What its function is in society and its value, that's yet to be determined. And, with any asset that trades on a free market, you could make that statement with confidence. All right. In today's economic calendar, 10:30, we have crude oil inventories. Wow, we're gonna have blockbuster day today. Crude oil inventories at 10:30. The one report that happens weekly, where 1 hour you can make your whole weekly income. We trade that live in our team room, and we trade it very well. And on top of that, 2 p.m. FOMC announcement, 2:30 p.m. press conference with Jerome Powell. Elite traders will be trading at 1:45 p.m. together. So we have a full day ahead of us, and we're going to navigate through this stuff and kick some butt. Let me turn around and get the room started, and let me say this is the last thing. Today is not a day that you want to be a hero off the open. You don't want to go in there and buy 10 lots. You want to keep the powder dry, so to speak, at the beginning of the session because you got so much opportunity. The worst thing that can happen is it's 9:32 a.m., 2 minutes into the market open. You've blown your account position that you have, the risk capital for today, and you haven't even traded crude oil or FOMC yet. All right, keep the powder dry, take smaller wins, be more cautious, and guaranteed today there's going to be opportunity. Just make sure you're around and survive the first part to be there for the latter part. All right, that's my advice for you guys. Have yourself a great day. Trade like a trade pro, manage your risk. And I know there was a question this morning, why do bullish markets open weak and close strong? The answer to that is because the buying happens towards the closing bell. All right, basically there's no buyers at the beginning of the day. Hence, it opens weak. Lack of buying means prices drop. All right, there's no buyers at the beginning of the day. In the afternoon, as you get closer to the day, a lot of institutional money rushes in to get long before the close. All right, so it's a dynamic of rotation of capital rather than hours of work. All right, that's all we got. Take care. Goodbye. Trade pros in the room. Let's talk about some support levels in S&P. Got a funny text, so I laughed. Today I'll give you some areas where I think will qualify good long-term, long or high, good probability trades with low risk. And remember the advice: let's keep it small at the beginning and scale up with opportunity. It's always better to shift up than it is to shift down. All right, for the gearbox and for everything else. Let's get started. I'll cover S&P 500. Market will do the Dow, and then we'll send it to our oil desk. Stephen do some oil analysis. It's a big day for oil today.